The strategy that I provided you with may seem a bit difficult to understand and quite difficult to follow, but I can assure you it's not. So I'll go through that now. So firstly, we'll make sure that people have a clear understanding of the strategy, because I can understand how some people may feel that it looks a bit daunting and a bit more complicated than it actually is. So just to quickly go through it, the strategy has 2 moving averages on a daily time frame, 2 moving averages on a 4-hour time frame, uses a zigzag indicator and Fibonacci retracement. So let's get into it. So we'll get the USD JPY, because that's what's in the file that you've downloaded. 2 charts. Go to window, tile windows. Have one side being a 4-hour time frame, this side being a daily time frame. Go to blank charts on both sides. On the daily time frame, we have a 10 EMA and a 50 SMA, and on the 4-hour time frame, we have a 5 EMA and 10 SMA. So let's get to work on that. Click on the chart, insert, trend, moving averages, 10 simple. On this side, trend, moving average, 50 simple. So we've got the simple moving averages on now. Now for the exponential, 10 exponential in blue for the daily time frame, and on the 4-hour time frame, exponential in blue, but we have it 5 EMA. So now we have our moving averages. The daily time frame has a 10 and a 50, and the 4-hour time frame has a 5 and a 10. But the 4-hour time frame also needs a zigzag indicator. So we click on the chart, go to Insert, Indicators, Custom, Zigzag, press OK. You can see the zigzag here, but we can right click, Zigzag Properties. Instead of having it red, we'll have it gold. Make the line a bit thicker so we can see it more. And zoom in so we can see that. And what we'll do, the reason why I provided you with the performance of the automated version, so again, this strategy that I've provided you with now is a manual version of my one of my fully automated versions that you can follow. My fully automated version is quite more intricate. It has a different exit method and a couple of changes to give it optimum performance, but still this strategy here will still work. So if we look for opportunities in 2020, the start of 2020, the first trade was in around February. So what we'll do, we'll go back in time, click on the chart, auto scroll. So now we're in February here, and on the daily time frame we'll do the same thing. February, which we have here. With our strategy, if you go down to the bottom, it states the daily trend for a buy signal. The daily trend must be an uptrend, so the 10 EMA must be above the 50 SMA. So if we look at February here, we can see that it starts off with the 10 EMA being below the 50 SMA. So the blue is below the red, so you're in a downtrend initially. But once the blue is above the red, we're in an uptrend. So we'll mark out this level now, or this time when the crossover happens. So from this point, which is the 6th of February, until the 3rd of March, we'll say we're in an uptrend on the daily time frame and looking for a buy signal. The reason we're in an uptrend is because the 10 is above the 50, which you can see here. The 10 moving average is above the 50, so we're in an uptrend. That means we're looking for buy signals. So the 5 EMA is below the 10 SMA. Oh, sorry, what I'll do is I'll do the same thing here. Put this 6th of February so we can see where we're looking from. And as you can see, the where's it state? The 5 EMA is below the 10 SMA. So from that point, you can see that the 5 is below the 10. And then it says draw Fibonacci from zigzag low point to zigzag high point. So from this point, the low zigzag point is here to here. So we get our Fibonacci, click on Fibonacci, go from low to high. Our Fibonacci key levels are between 38.2 and 90% level. I already have the 90% level on here, but what I'll do is I'll show you how to put it on. Go to the bottom. So now I've removed the 90% level. If you can't find your Fibonacci up here, just go to Insert, Fibonacci Retracement. Then you draw a Fibonacci from the low to the high. Click on Properties for Fibonacci. Scroll down to the bottom, or say Add. Then 0.90, 90.0. That's okay. And as you can see, we have our 90% level. So remember to draw the Fibonacci from the low to the high. Mark out Fibonacci key levels, which is between the 38.2 and the 90% level. So I'll get a rectangle. Which is this line to the 90% level. Let's zoom in a little so we can see it a lot clearer. So we're looking around this level. So once you've drawn out your Fibonacci from the low to the high and you've marked out your key levels between the 38.2 and the 90% level, it says wait for price. So the 5 EMA must cross and close above the 10 SMA. So the 5 EMA is the blue, the 10 SMA is the red. You can see that it's still below. We get a crossover around this level, just about. But instead of trying to guess, what we do is we go up here, click on data window, hover above the candlestick. We're looking at these two values here. So MA10 is the simple and MA5 is the exponential. So you can see that the MA5 has a reading of 109.787 and the MA10 has a reading of 109.785. So that's a clear indication that the 5 moving average has a higher value than the 10 moving average. And according to our strategy, when the 5 crosses and closes above the 10, that is a buy signal for us, so we can enter the trade. On the close of this candle, we would have entered the trade. So let's get a horizontal line in green. Actually, I changed that. Change it to yellow. We'd have entered at the close of this candlestick, so at this level here. Where would we put the stop loss? It says place stop loss at the lowest point that price reached within the Fibonacci key level. This is our key level between the 38.2 and the 90% level. The lowest point that price reached was this level here, so we'll get a horizontal line. Place the stop loss there. And it says take profit when price reaches 1-to-1 risk reward ratio. So to calculate risk reward ratio, you click on your entry price, or sorry, you calculate the distance from your entry price to your stop loss. You can do that by getting the crosshair up here. So you click, draw, and the distance is 143 in pips, which is 14.3 pips. Go up to 14.3 pips, and that's where you would have taken profit. The same thing happened with the automated strategy, but it has a different exit method. So what I'll do now, again, this is performance from my fully automated trading robot or algorithm that I have. I've got optimum performance on them based on my skill set and expertise. What I'll do is I'll go to the strategy tester, go to the settings. When you do have a clear strategy, well, firstly you need to have a clear strategy that clearly tells you when to exit the trade, when to enter the trade, when to exit the trade, where to put your stop loss, when to take profit, and also your risk management. Once you've got that figured out, you can then work on different exit methods. So instead of using 1-to-1 risk reward to take profit, you could decide that you're going to do 2-to-1, but make sure that you do all the tests required to help you, validate choosing that option. But then once you've got it programmed, you can change all the settings within here. But I'm not going to go too deep into this because I don't want to go over people's heads. If you've got any questions about the fully automated version, just let me know. Now that I've changed the dates, if you look, this trade was around February the 14th. So at the bottom here, I'll just have it from February the 10th. We'll see a visual version, so you can see it in real time. Click on the chart, get the candlesticks, and what I'll do is I'll get a horizontal line so I can mark out the date at which we enter, so we can speed it up, which is the 14th of February. So speed it up because we don't have all day. Slow down a little. And what you're going to see is the fully automated system that I developed, enter the trade, and that's this is also the same entry that the manual strategy that I've provided you with would have entered. So I'm just throwing money at you. So you can see now that the trade was entered at this level here, which is the green dashed line. The stop loss would have been at this low here, which is the exact same places where we placed our stop loss according to our strategy. It says place stop loss at the lowest point within the Fibonacci key level, which is what happened here. I have a different exit strategy for my system, again based on my experience and changing the parameters. You can do the same, but I'll speed it up and you can see that cashed out some profit, or locked in profit around this level, and then cashed out profit at this level. So that's the way to get more profit than just doing, cashing out a one-to-one. If you speed it up, you can see how the expert advisor or the robot would have entered trades, profits and losses fully shown, how it manages the position, all that sort of stuff. Skip to the end, and you can see that the results here are the same as the results that I provided you with here, so you can check in your own time. If you go over this document, you can see it's a good way for you to go over the document, which is my performance, so you can see where the trades would have entered, and you can see that if you're following them correctly. So what I mean by that is literally have the strategy out, open up your chart on USD JPY on a 4-hour time frame. Make sure you have the daily time frame there as well, with the correct moving averages. Once you've got that there, follow the strategy from 1 to 11. Make sure that you follow everything and check to see if you entered the same trades as I did. If you did, then that means you're following the strategy correctly. If you didn't, then you should work on it. If you got any other questions, just let me know and I'll make a video on it. Hope this video helps and gives you a clearer insight on how to follow a trading strategy. Now you should know what a trading strategy actually consists of. You can see that when you do have a clear defined strategy, there's no thinking involved. You literally just following the steps and then entering the trade and pulling the trigger. There's no thinking involved. Again, you just follow the steps 1 to 11. If all steps are in line, then you can enter the trade. If they're not, then you don't enter. So what I mean by that is, out of all of these 11 steps, if you only have 4 of them, don't force the trade, just wait. So I hope that now you have a clearer understanding on how to use the trading strategy. Initially, it could have looked quite daunting, I understand that, but now you can see that the 4-hour time frame literally has 2 moving averages and the zigzag indicator, and the daily time frame just has 2 moving averages. The daily time frame is the one that we use to help determine the daily trend. So if the daily trend is in an uptrend, we'll only look for buy signals. If the daily trend is in a downtrend, we'll only look for sell signals. That's the safest way to trade. I know you've heard the trend is your friend until the end, yeah. But as long as you're trading with the trend, it's less aggressive, so essentially less risky. Also, just make sure that when you are following your trading strategy, you need to have clear defined rules of when to enter the trade, when to exit the trade, where to put your stop loss, and when to take profit. Those are key things that every strategy needs to have. Providing you're following all of those, just make sure that you've got your strategy written down, so it's a clear step-by-step set of rules that you can follow, because the only way to stay consistent is by following the rules exactly the same over a period of time. And when you do that, that's how you stay consistent. Without doing that, that's when your trading performance is quite erratic, and you don't want that. So if you'd like to know more information about my fully automated trading strategy and how I optimized it, just let me know. I'll make some more videos on it. Or if you'd like me to manage your trading account, then just let me know and I can handle that too.